Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, February 20, 2025. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? We got stuff going on the docket today. That I can assure you of. Let's take a look at the big picture first. By the end of the day, the market was down a little bit, about $2.50 or 60 cents. We're still clicking off here. It's the last couple of minutes of trading. I started the video a few minutes early. It's about 0.4% on the downside. That is the SPY. But what you'll see is we had a little bit of a tail today. They didn't quite get to the 20-period moving average, but I'm going to show you in a moment what they did get to today. Was a very, very important spot and very telling. And by the end of the day, what we can say is she's above all the moving averages, no material change on the chart. Sure, it was a down day, but that doesn't mean there's material change on the chart. And she really didn't get very far or didn't make anything happen today from a bull or bear perspective. The market was down 0.4%. Can't make a federal case out of it one way or the other. You clear up some of the noise, you flip over to a weekly chart, and what happened? Nothing. Above all the moving averages, trend is your friend, and that's all we need to know. You clear up the noise. This is what you have. It's in a firm and complete uptrend, at least until it's not. Back to the daily chart. So where did the market go today? What was the low and why? What if we take a trend line and we connect the high here, which was 610.78, the high here, those are point A and point B. We draw the line over and we see that in terms of a breakout situation, the market broke out above this trend line and today came back to run a test of said trend line. As you can see, early morning session, here's an hourly chart. Come down to test the trend line, took 3 hours to test the trend line, traded away from it for the rest of the day. Look at a 15-minute chart. You can see here, put in a low, put in a higher low, tested, and then the successful test sent prices higher for the remaining part of the day. Trend lines matter. This is the kind of stuff that's taught in the class, MSF Masterclass series. We talk about this stuff in the live room each and every day. Frankly, I've been teaching this stuff on YouTube for the better part of 10 years or so. What was this? This was the thumbnail to last night's video. When you look at a 5-minute chart and you see right of the vertical is today's activity, you had a gap down, they got on the toboggan, and they went down to run a test of the trend line. Little bit of a sleigh ride-ish situation. How did he know? Was it voodoo? Crystal ball stuff? Cycles? Timing? Normal garden variety stuff? Combination of something? What was it? How you doing? Happy Thursday. We got some nearby numbers. Truth be told, as the morning went on, we've got the other numbers up on the board. There's your 607.50, give or take. The gateway to that was 608.38. And frankly, from a trading perspective, I didn't think they were going to do that all in one bite. So we were buyers a little higher, but then it became apparent what they were doing. A lot of traders were able to buy up the trend line, took a nice bounce right back quickly. From a visual perspective, don't forget, this is what traders are looking at in addition to the numbers up on the board. And what we had was a 607.50 down there with that trend line. So we certainly did have traders buying the market up down there for the bounce back situation. But we were also trying to pick off a long on the way down. Didn't work, had to re-engage down here at the trend line at the 607.50. Life of a trader. It's all in here. Read the notes, pause the video, go back to the chart to double check the work. And then on the way back up, we've got above 607.50 is the case to work back up toward all the way 609.21. You could see here 609.21. You see it here. You see it again later on in the session right here. Finally, they bust it through and then they go to the next number. which was above the big fat round number of 610. And then we had the pivot up at 611.65 today. About the lazy swing trader automagical algo system. So what we have here is KWEB, which is the Crane Shares Trust China Internet ETF. We had an entry at 28.40. Okay, so we picked off a low-ish situation. Then we had a couple of exit alerts along the way, and today was a third exit alert up at 36.50, which really equals about a 28.5% gain from the entry that we had at 28.40. That's a rip-roaring rocket ride. And the other thing is, think about this for a moment. We have traders that buy the options. So they're buying call options. What do you think the call options return if the stock is up 28.5%? Right, it's hundreds of percent. Just saying. Lazy swing trader, automagical algo system. How does it work? Traders get access to a watch list. You know what stocks are getting close to their entry targets, whether they're entry on a long side or entry on a short side. Either way, once the entry target is hit, you get a text email and a text alert. Once the stock is active, it goes on to an active open trade alert list. You have stops, profit targets, meaning plural, not just one. Everything you need to be successful from a swing trading perspective. It's a do-it-for-you service. You don't have to do anything except pay attention. You open a browser, you type in lazyswingtrader.com. Pretty simple stuff. You come out with a one-page situation. Here's a video explaining it. Get access now. Here's some stuff. And then here is the closed trade list, and you could see their performance. This is a base hit business. Traders take them with options. They get way more than a base hit. But if you're just buying the stock, these are the returns. And you could see here, it's a matter of number of returns, number of wins. On this page, there's about 25 stocks. Guess what? Or 25 trades. There's 3 in the red, 4.5%, 4%, and 4.7%. And you could see all the green numbers. This is a base hit business. Base hits put you in the Hall of Fame. You see everything here. It's an open book situation. What's going on over in Camp IWM? Well, they're leaking. They were down along with the market, down about 1%. So leading the market on the downside, almost 2 times or about 2 times the amount that the S&P or the Spiders was down. It's actually a little bit more than that. So the IWM is down $2.17, almost 1%. Again, let's pay attention to where they are in the chart. Below moving averages, the trend is your friend. She's below the convergence of the 50, which is the blue trend line, the 20, which is the red trend line, and the purple is the 100 trend line, 100 period moving average on the daily chart, below all 3. And therefore, we know this is bearish because when we clean up the noise, and we've been talking about this all week long for a couple of weeks, as long as they're below here, this is a bearish situation going on unless she's building energy underneath the 20 period moving average to spike higher one more time. But we take it at face value. What's she doing now? She's having trouble rallying now. Period. Full stop. The IWM or small cap space is my favorite market leading indicator, so we heed those type of results and outcome. Similar situation for the folks down at the transportation department. As you could see from a weekly chart perspective, totally different position on the chart than the SPY. Let's look at it one more time. SPY, we've got some noise on the chart. Let's clean up the noise on the chart. Don't need it anymore. And you could see we're hovering around all-time highs, weekly chart. You look at the IWM, this is nowhere near all-time highs. This is a drop lower and a bearish, flaggish, sloppy-ish kind of pattern situation. You look at the transports, same thing. Nowhere near the all-time highs, drop down, flaggish situation, no dice until or unless they can get above the high and stay above the high of 16,704 spot 05. So we have 2 of my favorite market leading indicators that visually look totally different on the chart, nowhere near all-time highs. Should we heed that information? And I would say until proven otherwise, yes, we will heed that information. Why else do we heed that information? Because from last year, we're still looking for a February/March low situation. Did we already get an early February low? It's possible. We don't know for a fact. But the schematic that we're working off of, what was taught in the cycles module of the course, MSF Masterclass, we did the 2025 forecast in real time, came out with a March/February low in 2025. And yes, in that class, I teach how to do a forecast each and every year going forward. Plus, oh, by the way, I give you the tools to do it. What about the Q people? Any material change here? No, little bit of a dipsy doodle, pop right back up. So it was a little bit of a down day like the spiders, about 0.4%. In Q terms, that's about $2.29 to the downside. All it is a little bit of a red day, nothing more, nothing less. We're not going to make a federal case out of a red day. Above all the moving averages, trend is your friend, period. What about the financial space? Now, this is a different kind of story. Down 1.5% in one fell swoop, came down below and closed below the 20-period moving average. I think that's information that we need to know, that we should know. It's important information. We're going to watch it again tomorrow, see if it's leading indicator for the markets. Without the financials in either direction, it's unlikely you're going to get participation from the market as a whole, meaning if the financials are floating higher, it's unlikely anything's wrong with the structure of the market underneath. However, if the financials crack a little bit, you have to worry about the overall structure, the underlying foundation of Mrs. Market. We're watching the financials closely. The entire U.S. economy hinges on the financial sector. What about smash mouth? Could be in an on-time type of situation brewing tomorrow. Above all the moving averages, trend is your friend. Nothing's changed from what we've been talking about, working her way up toward the gap, filling the gap. Didn't do it yet. Maybe she does, maybe she doesn't on this run. Maybe has to pull back first and puts in an ABC-ish type of situation. What would that look like? Well, you have an A leg up, so we'll use a trend line for an A leg up. Then you have a B leg down. Maybe she comes back to run a test around the vicinity of the moving averages, and then you have a C leg up to finish above the high of the A leg officially and go ahead and fill that gap or higher up there. That is certainly possible of something that could be in development for smash mouth. Smash mouth, or the Philadelphia Semiconductor Index, is a pretty good proxy for the tech space as a whole. If the tech space is running, the semis are running, there's likely nothing wrong with the overall market. Semis were up today in the face of everything else down, albeit only 0.2%, but still up nonetheless. So we'll heed, once again, that information. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.